Global markets head into the North American session in an upbeat but very cautious mood as investors continue to balance resilient economic data against elevated geopolitical uncertainty in the Middle East. U.S. equity futures are modestly higher after a mixed European session, while the U.S. dollar is tracking lower overall, even in the face of elevated oil prices. The market is now awaiting greater clarity on whether Washington pursues a ceasefire with Iran or a broader military escalation. The geopolitical backdrop remains the dominant driver of cross-asset price action, with every headline from the Gulf carrying the potential to quickly shift sentiment. The euro has been underpinned by stronger than expected German ZEW economic sentiment, which pointed to improving confidence in Germany's recovery despite ongoing concerns surrounding higher energy prices and geopolitical risks. Attention is also beginning to shift towards Thursday's ECB policy decision, where markets expect rates to remain unchanged but will closely scrutinize forward guidance for any signal that further tightening remains likely later this year. Interestingly, the pound hasn't been able to benefit from UK labour market data that proved more resilient than expected. Perhaps the new government's announcement of a VAT reduction on household energy bills aimed at easing cost of living pressures factored in, along with some selling of the fact post-labour market data. Elsewhere, Canada remains in focus after softer inflation data and renewed U.S. tariff measures targeting Canadian alcohol, dairy, and automobiles weighed on the Canadian dollar, while New Zealand's stronger than expected second quarter inflation print reinforced expectations the Reserve Bank of New Zealand may need to extend its tightening cycle. Looking ahead to the North American session, the economic calendar is relatively light, with US ADP employment data representing the main scheduled release, although its impact has diminished as investors have shifted their focus back towards official payrolls. As a result, geopolitical headlines are once again likely to remain the primary catalyst for markets, while traders will also continue positioning ahead of Thursday's ECB policy decision and monitoring any developments that could influence the outlook for global inflation, central bank policy, and energy prices. That's all for now.